Let's analyze the stock market trading session for Thursday, April 21, 2022. This is a daily chart of the S&P 500. It was a very bloody day, and of course, I liquidated my positions. And remember this level we've been watching for the last few sessions around 4,500, where the 200, the 20, and the 100-day moving averages meet. Well, today that was a high, found resistance at the 100-day moving average and sold off, trended lower all day long, very aggressively, and I mean, it was a big drop. Let's take a look at the 5-minute chart so you can know what I'm talking about. Now, here's a 5-minute chart, opens way higher, finds resistance at the 100-day moving average was up here, and then it kept selling off. Then around this area, that's where you had the 200 and the 20-day moving averages dropped below that. Now, at this point, I'm not selling. I'm thinking it's going to bounce back and it's going to try a second time to push back above all these moving averages. Of course, I was wrong. Once it dropped to around this level, 44.50, thinking this should hold, and it didn't. At that point, I'm ready. I'm ready to just liquidate my position. The 5-day moving average was here. And now my last level, I said 44.30. Let's wait until it hits 44.30, which was here. It bounced off that. Once I saw that, after this big sell-off, I expect a bounce, and I placed my stop loss here below that low of the day. I said if it makes a new low of day, I will liquidate my position, and I got stopped out right there. And of course, the 50-day moving average was around this level. At that point, I did not even want to wait. I knew there was a high probability that it would just dip below the 50-day moving average. Decided to cut my losses up here. It was a small loss, but keep in mind that I bought 2 days ago around after hours around 44.50, which is this line, and I already had a big unrealized gain. Unrealized gains were about twice the size of my small loss, so my account definitely felt it. But that's just how it is. I was looking for a bigger bounce, but it didn't happen, and it was time for me to cut my losses. Going back to the daily chart here, a reason to short, not really. Remember that we still have strong support around this level, 40, 44, I would say 43.70. Who knows? Tomorrow we can bounce higher and end up, trading back and forth between this range, between here and here. So yes, it was a very bearish day. Look at the magnitude, the size of this candle, back below all major moving averages. But after this big drop, do I really want to short? No, thank you. I will wait and see if we bounce, I don't know, tomorrow or the next couple of days back up here, and then a dip below this, say this level or today's low, then that would make a better setup for a short. Until then, I'm just going to make the assumption, or assumption that is probably this level is going to hold for now. We'll find out probably as soon as tomorrow, and then see if this range is still valid. Now here's a party pooper, the Nasdaq 100. Today it really pushed right above the 50-day moving average. Couldn't get above the level. I said pushes about 14,300. I will go long. The high was just 23 points below that. Big sell-off, same as the S&P 500, but this one was really the one that triggered it, I think. Back below these moving averages. Here, I said it could be a good short, but after this big drop from the high, 314, about 400 points, there's no way I'm going to end up try to short all the way down here. Yes, it could work, but after the drop, this big drop, I don't think that's a high probability. A trade with a high probability outcome. I would much rather wait and see if this bounces back above here and then pushes back down. That might be a better setup. But for now, I'm doing nothing. It just this setup just didn't play out. Look how many days it spent inside this range. 4 7 days. Say roughly this range. 7 sessions, and then today finally dipped way below that. All the indices, this is the only one that was really inside this trading range. All the other indices were able to push higher. This one, maybe I should have taken clues from this, from the Nasdaq 100, and I should have just waited for this one to break out before buying the S&P 500 and the semiconductor index. Well, I didn't. I thought it could really get going, that it was going to follow the other indices, but I was wrong. And today confirmed it. And for the semiconductor index, of course, I liquidated my position. I said I my stop loss initially was here, under here. Then I raised my stop loss and I said if it dips below the 5-day moving average, I will liquidate my position. And I did. That's exactly what happened today. Let's take a look at the 5-minute chart. Here's a 5-minute chart. I believe the 5-day moving average was around this area, dipped below that, couldn't get back above that 5-day moving average. And after this big sell off, I would assume, or it was reasonable to believe that it could bounce back above that. And I it didn't. So I placed my stop loss under that low and I got stopped out. Decided to just cut my losses and just move on. Look at the sell off. Do you call this a sell off? Minimal bounces along the way. Back to the daily. Yeah, not. I don't want. I wouldn't get too bearish yet. It is still above this support. Yes, it failed to get above this level, back below these moving averages. But keep in mind, this has been support. Very difficult to anticipate or try to predict that is going to dip below this level. I would rather just wait. Maybe the setup plays. Maybe this is a range again, and we'll try one more time to push above this level. But we'll see. No reason for me to sell. I mean, there was a good reason for me to sell, liquidate my position, but no reason to sell short. At least not yet. Dow Jones Industrial Average, same as other indices. Big sell off, back below the 200-day moving average, 35,000 level, below the 100, and it's sitting right on the 20-day moving average. Yes, this looks very bearish candle, but it is still above these moving averages. So I don't see a reason to short. If I was long, I would probably liquidate my position or at least reduce my exposure. But shorting, I don't think that would be a good idea. Um, it's still, like I mentioned, above these moving averages. We'll see what happens. But if it just ends up consolidating around this area and then try to push higher, or vice versa, if it consolidates around this area, push below that and break below these moving averages, then it will be a different story. But of course, I told you guys, anything in between here, it can be very choppy around these moving averages, which was the case, and it really tried to push higher and it failed. Now back inside this trading range. And now for the Russell 2000, of course, this one, no exception, big sell off, back below all major moving averages, was able to dip below these moving averages. Look at the magnitude of this candle. Now, found resistance around this same pivot point. That was nice, that it acted as a very strong resistance. That was a high for the day. No reason to be long, no reason to be short. I was still above this support level, um, Wait for the next couple sessions, see where it wants to go. Break out of this range. If it dips below this level, it can really get going to the downside. However, if it happens tomorrow, I will skip it. If it spends a couple sessions, say up here, and then dip below this level here, that could be a short. Thanks for stopping by and good luck trading tomorrow.